Good morning to all traders once again, and welcome to another daily markets watch provided to you in partnership with Omega FX. Stavros Isios here. It is the 30th of November today, and we have the monthly end today, and it's going to be a very interesting session. Now, not all do we see the oil, equities, and other instruments and assets falling due to the increase in travel bans worldwide, but we do also have to see the markets being impacted by the end of month flows. Now, safe havens are seeing some sort of flows coming in as well, but it's on the currency side rather than on the commodities side. So gold is not really pulling off a good move to the upside, to be fair, while risk assets are declining. And that's despite the fact that we've had even RBNZ last week, delivering a rate hike, the first bank. Still, commodity-related currencies are weak because they are risk assets. So we're going to have a quick look on USoil, which has a very interesting month, but also an interesting week because we have the EIA report. But as well on Thursday, we have the OPEC Plus meeting that might actually be delayed, to be fair. But we have to see what is going to happen during that meeting anyway, because if there is a release of 400,000 barrels that the OPEC Plus members are discussing releasing into the markets, then that's going to be detrimental for the prices of oil. However, and don't forget, guys, inflation is rising. So oil prices falling is good for the economic situation we are in, and also for banks, because, that would give them another reason to say that inflation is transitory. It will actually help them allow rates to remain a little bit closer to zero for a longer period of time, which might be actually supporting stocks. But then if stocks are going to go up while oil is falling, it's a bit of a no risk situation. So either way, it might actually help currently with Omicron as well, to calm the markets a little bit, okay, and get them back to a state where everything is a bit more normal. Today, Powell and Yellen also speak, and it's very likely that they're going to talk about Omicron and what the impact is going to be on Fed policy going forward. So it's going to be a very interesting session. USD oil, USDJPY, and kiwi. Oil has moved lower after a short-term correction up to where was that? Let's check the level, to 42.73. Okay, and with that being done now, it doesn't necessarily mean that because we have a new low that we're going to start moving higher. Actually, the situation here gets a bit more complicated, because 23.6 means that the next level will be down at 38. Between that, of course, we've got a very strong level to break at, I would say, at 65, around 65, and then around 61, and of course also got 63.51. Might be some weekly close or something. We do get a signal on the MACD. Okay, that looks like a bullish hidden divergence for now, and that might give us some relief going forward. However, and since we've exited this channel, the ascending channel from the post-COVID crash, then this is more bearish than it is bullish currently. Okay, more bearish than it is bullish. So let's go down on the 4 hours and see how we can use the Fibonacci to give us some clues, see where we are, what we have done, and what we can expect going forward. So if we look at this as a move to the downside with a potential correction over here, you'll be able to see that we've gone past the 100 Fibonacci expansion of this move, which means that this is very likely going to be a progressive move to the downside rather than just a corrective move. So the next level to look in case we do continue lower, is going to be 62.15, and of course in between the 63.50. That, of course, will be enforced if we remain below 72.68. I know it's $5 from where we are now, and that's a big move, but this is what it is because we look at the 4 hour and we're looking for swing trade opportunities. Now, with that being done here, and with only 2 waves being completed so far, we might be looking for a correction here. We might get some sort of triangle pattern and then move to the downside. We might get some other correction over here that would look more of a sideways market and then move lower, or we might just get something like this, you know, and once we get to around the 75, start moving lower down. Only when and if we break above that level, which is around the 75.20, the chances of continuing higher are going to increase. But as long as we're below that level and we do not you know, have some sort of how do you call that, let's call it, where interaction between the 2 levels, then the downside is likely to prevail. Another good thing, and you always know that I do love channels and Fibos, would be, or a good good method is just to draw a channel over here on that particular move. Actually will be down here since we're looking at this, and you know, look at a potential move up here where we can maybe get some rejection for a further continuation to the downside. Note that this channel as well now has been exited, so if it turns out to be a false break only, it's when we're going to get back within this channel. But if we don't manage to get above that channel, then this is very likely to decrease lower rather than do anything else. USDJPY, very nice signal over here, which I think we identified now. We talked about the upside as well the other day, if I'm not mistaken. The Fibonacci at 23 is not even done, okay? And with this signal over here, it looks like just has started a move to the downside. We can get to here, 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 or even here, okay? And that could still be bullish, but obviously it's going to be in the medium to long term, right? Now, as long as we are above 112.55 or so, though, the bias remains to the upside. And that will be the same case if we get down to 111.68 and bounce, or even down to 111 and bounce. And 111 is a strong psychological level. Now we are fighting with 113, okay, which doesn't necessarily mean that we're going to stay there. But of course, we can use different tools as well to assess whether we are close at even getting somewhere near or somewhere below the 130. And for now, we don't really see much, especially if we take into account that we haven't even broken below that previous swing low, okay? So, although I will tell you this, that looks like a correction, okay, rather than anything else. So if that looks like a correction and this is like another progressive move to the upside, it's very likely, I'm just saying now, it's potentially that we might see something like this taking place. We might stay a little bit biased to the upside and get some corrective move to the upside that is going to give us a fresh high over here, and then start turning lower down for you know, to come and find support at the channel. But that is not obviously a must, right? Equally, we could just turn lower from where we are now, because the truth is that we are moving progressively to the downside rather than anything else. So if we have done already like 3 and 5 waves down here, okay, that means that we could potentially, and I repeat, potentially, since we have also a bullish divergence here with prices and the RSI, we could potentially see some sort of correction, perhaps up to 114 or so, and then a continuation to the downside potentially. So it will all depend on what happens in today's session. I am of the idea that we are going to see a potential upside up to around 113.70, 113.50 perhaps. And once we exit this market, because it looks like we are turning into some sort of sideways motion here, once we do break one of the other levels, then a continuation will likely ensue. For the moment, I will be looking at 113 to offer a bounce, okay, up to 113.60. If 130.60 breaks, we'll look at around 114. If 114 breaks, we'll look at 114.27. This is the level where the bias is going to change or remain the same, which is to the downside. Okay. If we move past 113, the next level will be the previous bottom, which is around, let me just quickly check that, 112.70. Okay, so as I said, bounce to the upside and then continuation to the downside in one of those Fibonacci retracement levels. Now the kiwi, well, to everyone's surprise after the RBNZ decision, is moving lower because it's a commodity related currency, and well, right now, they don't really do well. It has a similar pattern with oil, by the way, but either way, we're not here to discuss that. What I'm seeing over here is that we have also had a signal over here, right? You can see that signal, and the MACD started falling, RSI started falling. There is a lot of room to move, and we've just crossed, and we are looking at the weekly, right? We've just crossed the zero line on the MACD, which can be a very big signal if it continues. Now the 67 to me looks like it's a highly probable level to go to, either for a bounce. Initially, that might be met with resistance and the continuation down, or a bounce which might offer more upside, that can take us all the way back to the top and perhaps even higher. But I'm of the idea of doing multiple time frame analysis. So right now, we don't really see any signal on the RSI and the MACD that indicate that potentially we might start seeing a trend. So I will be looking for 67 next. That means what? And as you well know, that I'm going to draw again a channel over here. Although the right way would be to actually draw that over here and over here. And we can assume, we can even actually pull a line right in the middle. That would be the right distance, and that would be right in the center. You can see that we have had a fresh low below that level, which gives a bit more confidence to bears, and the appetite of course increasing that this is potentially going to move a little bit lower down. Now, because we did have a very big move down here from that top, right, without a decent pullback, we need to see if we can potentially have some support from the indicators for a move to the upside. But on the 4 hour, we don't even do that. We don't see that. We are oversold, okay, which means that we could be turning into a bearish trend now, continuation, and the MAs are negative and getting worse. So we need to go down the 4 hour to see if we can identify any signals there. Do we see something here? Again, the MACD and the RSI, they don't look good. Okay, so that still looks like there is more downside to come in, but maybe, and I just say maybe, because the top for now for a potential move to the upside might be around 68.77. Well, maybe we can go all the way up to around 68.57, okay, to do a flip. A flip would be that support would become a resistance, and then we'll continue lower down. Now, for that, of course, we need to go down the 1 hour and see, do we have any signals on the 1 hour? Well, finally, on the 1 hour, which is the short term, guys, I repeat, the short term, we see a potential signal, both RSI and MACD indicating upside. Okay, so we have done a bounce, and it looks like we're going to get a potential move up to around 68 or so. Okay, maybe we're going to stop around that level for a triple bot top and continue lower. Maybe we're going to do that flip and go lower. Maybe even we're going to enter that territory and go to around 68.77. But I don't think within the next couple of days or so that we're going to see prices going above that level. Okay, This is the 23 Fibonacci retracement for now at least, and you could also move that in case we do see a fresh low. But for now, I remain bearish, and you know that we can also put our channel over here, place our channel over here, and that would be the top, hold on, and that would be the bottom over here, and that would be the second level to flip. So you see, we have done a decent move over here after failing to, you know, to re-enter that territory. So we did a bounce, so we'll have to watch that level closer, which is around 0.6820 or so. If we do get through that, then the next level up will meet resistance around 68.57, which makes a very nice cluster with the support just identified. So guys, that will be all for this day's session and video. Thank you very much for watching. Stavros Studios for Omega FX, and we'll speak again tomorrow.